Connectivity TL Beginner's Guide. Welcome to Investing ABC. Today's company is Connectivity, ticker TL. If you've never heard of them, here's the one-line version. They make the tiny plugs, sockets, and sensors that move power and data inside almost every car, factory robot, and AI server on the planet. Quick reminder before we dive in, this is an educational walkthrough of the business, not investment advice. So, what does TEL actually do? Connectivity is a connector company. A connector is just the little piece that joins one wire or circuit to another. Think of the plug at the end of your phone charger, but scaled up to industrial precision and shrunk down to fit inside a car door or a data center server rack. Makes roughly $19 billion of revenue a year selling these parts, organized into two big segments that are almost a 50-50 split. The first segment is transportation solutions, about 52% of the business. The biggest chunk inside it is auto, the connectors that run through your car's wiring harness, plus the parts that handle electric vehicle batteries, infotainment screens, and driver assistance cameras. There's also a commercial transport piece, the connectors going into trucks, buses, and construction equipment, and a sensor piece for things like temperature and pressure readings. The second segment is industrial solutions, about 48% of the business and the faster-growing half. Inside industrial, the star is something called DDN, Digital Data Networks, which is basically the connectors that go inside AI data centers. That single product line is approaching a $2.4 billion annual run rate, growing nearly 50% year over year. Industrial solutions also includes energy. Think connectors for the U.S. electrical grid, boosted by their recent acquisition of a company called Richards, plus aerospace, defense, and marine, medical devices, and general industrial automation. Total customer mix runs from Toyota, Volkswagen, GM, and Ford on the car side, to Amazon, Microsoft, and Google on the data center side, with aerospace and defense primes and U.S. utilities filling in around them. So, who does TEL compete with, and how does it win? The two big rivals to know are Amphenol and Molex, both also large global connector makers. The connector market in general is fragmented, but Connectivity is consistently the number one or number two player in most of the verticals it competes in: auto connectors, industrial connectors, and data center connectors. That scale matters because connector manufacturing rewards volume. You need huge precision stamping and plating operations spread across many countries to serve global customers. And TE has factories in over 130 countries with around 90,000 employees. The real moat just means competitive advantage. The thing that keeps rivals from catching up comes from how TE works with its customers. Their engineers literally sit inside their customers' research and design teams, co-designing the connector for a specific car platform or a specific server rack. Once that connector gets designed into a product, it stays there for the life of that platform, which can be 3 to 7 years for industrial gear and even longer for cars. Switching to a competitor would mean redoing the whole engineering qualification. It's expensive, slow, and risky. That's classic switching costs, the friction that keeps a customer locked in even if a rival offers a similar product. On the recent earnings call, management said customers are calling them to ramp faster, not asking for alternative suppliers, which is the tell that the lock-in is real. There's a second piece of the moat worth understanding. TE plays in both copper and optical connectivity. Inside an AI server rack, the very fast short-distance links are still copper, but the longer links between racks are moving to optical fiber. TE recently acquired a passive optical connectivity company to cover the fiber side too. The CEO put it bluntly, it's not copper or optical, it's copper and optical. That means TE's addressable market grows no matter which technology wins. What are the key drivers for the business over the past 5 years? The 5-year story of TE Connectivity has 3 drivers. The first and biggest is AI, specifically the DDN line we mentioned. AI data centers need huge numbers of very high-speed connectors to wire together thousands of GPUs, graphics processing units, which are the chips that handle AI computations. Every new AI cluster from a hyperscaler is jargon for the giant cloud companies, Amazon, Microsoft, Google, Meta, needs TE-style connectors. The DDN order backlog now extends into the company's 2027 fiscal year, and AI revenue keeps getting raised quarter by quarter. The second driver is automotive content growth. This one is subtle. Global car production isn't really growing, it's bouncing around 88 to 89 million units a year. But TE grows its auto revenue 4 to 6 percentage points faster than the car market every year, because each new car has more electronics in it than the one before. Electric vehicles need battery connectors. Driver assistance systems need camera connectors. Touchscreens and over-the-air updates need data connectors. For commercial trucks, the shift is even bigger. Next-generation electric and hybrid powertrains carry about $2,000 of TE content per vehicle versus around $400 for a traditional diesel one. The third driver is margin expansion, a fancy way of saying profit per dollar of revenue. Operating margin is up to about 21.7%, with both segments now running above 21%. Two things drove it: higher volume making each factory more productive, which is called operational leverage, and a mix shift toward higher margin AI connectors. Management says about 30 cents of every incremental dollar of revenue drops straight through to profit. To wrap up, so when you hear TE connectivity, picture a 90,000-person engineering and manufacturing company that quietly makes the connectors holding together cars, AI data centers, and electrical grids. A hardware picks and shovels play on three of the biggest technology trends running today. As a learner, the thing to watch over the next year is whether DDN, the AI connector line, keeps tracking ahead of plan, since that's the part of the business pulling the growth rate up. And keep an eye on whether the optical acquisition starts showing real revenue, because that tells you the copper and optical hedge is working. As always, this is for learning purposes only, not investment advice. The goal is to give you the business map so the rest of your research has somewhere to start.